the entire day as well. We've been talking about it since I came into the London session. Sell side only. And obviously it's resulted in a really big winning trade, as you can probably see. Now, we did take one shot at the buy trade from the open, and then we added into the buy trade, but from the top edges, we've been working more on the short sell. So when we take off all the noise, and you're left with a kind of empty chart, when you come into your charts, you're obviously going to be looking at it from the point of the original trade, which is the overnight session highs. So you could mark off for argument's sake here. It's not going to matter because we've got another high there. And then we've obviously got this US session low down here. And if we've got another US session low here, which is the NYMEX low right there. So we've got the NYMEX low right there. And then we've got the high price here. We've obviously, if we want to do the settlement highs as well, which is the actual US session, the high price is actually right there. That's the high of the oil session. So we've got some really good price levels. Now, as you start seeing the trade idea coming in, it's quite clear that, you know, if you're bearish, well, you've got a long way to go to get that target price, because this is going to be your target price down here. Now, first things first, what is your value narrative? First things first, what is your storyline? Where are you going to go? Now, obviously, as the overnight session begins, what's going to happen is you're going to take that line, because that line isn't as relevant anymore. And what you're going to do is you're going to take it now to the overnight session highs. And as the day begins, you're going to start marking off the overnight session lows. So you start marking off, for example, here. Because these are levels that are important. Every time I start marking off these levels, these are target prices. So I've got a target price here. I've got a target price here. I've got a target price here. These are targets. You say, but, you know, so if I'm bearish, I've got two targets below me. If I'm bullish, I've got a single target above me. So this is what we're trying to figure out. So the first thing I'm going to be asking you is, what was the bias from the day before? Are we trading above the hedge level or below the hedge level? Was the market bullish going into the close? So we're very, very definitely looking at it initially, just purely without value indicators. We're looking very much at this as a probable buy trade, and whatever happens when we head into the 69 evens level is going to be down to whether we start creating some sell side value, right? So we've got that 69 evens level there. Whatever happens is going to happen probably in those areas. So our first gut feel is, when I look at this, where is the toxic? The toxic is quite obvious. Just put on your imbalance indicators and you'll see all the toxic areas that you're looking for. You're always going to be highlighting them, and you're going to be saying, where is this toxic order flow, for example, here going? It's going higher. So there was some toxic order flow in here that took out some highs. None of this is toxic because it's not achieved anything. None of it. So the last toxic order flow we had was probably this block here. Quite obviously, there was a commercial buyer in that area there, so that's going to be a price level that we are very aware of. So at the beginning, we already have a bias in the markets. What did it do the day before? It was bullish. So what's the weakest liquidity? Where is the highs and where are the lows? Where can we target what's got the biggest magnet? What's got the magnetic pull? It's going to be the top edges here. So we know that without any indicators at all, we would rather be buying into this. As a purely market structural point of view, we'd rather be buying these pockets of sell side liquidity, wouldn't we? So when we come into the London session open, you can see that we are right at the bottom edge here, right on 8 o'clock. We're obviously very aware that if this is going to be bearish, the London session would want to take it above 69, wouldn't they? Because that's where the commercial is going to be. So if the London session is going to be bearish, 69 would have been the natural location for it to be bearish from. So if I'm sitting at 68.50, would it not seem reasonable to be a buyer to take it up to 69 to find out whether the market's bearish or not at that price? So we saw this very, very toxic response here. We saw that we had created quite a strong toxic buy level here. And if we like the trade still to go, then of course buying into this area when it rejects seems to be a reasonable proposition. We take out the high price and we can see that simply by looking at it, it's definitely not selling off this liquidity anytime soon, is it? It starts to jam up at that point there, and we start looking at that saying, okay, so where am I going to be looking at? Well, we've got a VWAP bull. We've now got a toxic buyer out of this area here, so this could be a very interesting trade location if I want to stay on the buy side. Where am I targeting? Well, it's quite obvious that I'm now targeting day session highs here. That's where the liquidity is, that if I want to sell it, the commercial is going to want to take it above that price. It also brings in the 69.50 wholesale. So as the price rallies, quite disappointing that it's not particularly powerful rally, and you can see that it does accelerate through the top edge and then slows back down again. This rally looks nothing like the rally that we had here, does it? The evidence is now mounting. We also have a new buy side target, a sell side target, of course, which is now the overnight session lows, which is here. So we've now got this overnight session low. We've got prior day lows. We have a target price here. If we decided to be sell side, we've now got these target prices in our sights if we ever decide to be sell side. So one of the things we start watching is we start watching to see how top edges start trading. Do they sell off? Do they sell off aggressively? What do they do? Do they get really, really keen on this or not? As we trade up into the top edge, it gets slower. It rejects off the 50. It rejects into this area here. And you're wondering, I'm not terribly sure anymore what I want to do here. Well, this is the good thing about having relative value, isn't it? Having relative value allows us to start making assessments against these. But if I want to be selling this, I want to try and sell it up here, don't I? I want to try and sell it into this new liquidity level, because obviously now this is the overnight session high here coming into the New York session. So if I want to sell it, that's now going to be the best possible price to be short from. And if I want to buy it, I've still got these target prices here. Target price here. And I've got a target price here. So these are the prices I'm going after if I do get short. There is no other target price at this point. You might say, but what about measured moves? Yep, exactly. But this is where we've got actual liquidity right now, don't we? I don't know how it's going to break. So as the price then comes down into these areas, we go back above the 50 and again it jams. And it puts in a little bit of inside liquidity here where we start recognizing that there was a seller coming in at that point as well. So all of these start to give us ideas. We can see that this sell side opportunity starts to present here. It goes up, taps the liquidity and comes away from that area very quickly. Now, the challenge you've got is if you didn't get that sell in, you're going to be struggling a little bit, aren't you? Once we take out this liquidity here, you can see that there was a brief glimpse of a sellable opportunity just there before the market tanked away from that as a narrative. You can see that we took off this beautiful technical structure here. And obviously, if we were to look at that from a break and then a retest here, there might have been a nice opportunity for you to get into that as it started to sink away. Because remember, we're still to hit the first target. We haven't even hit the first target yet. As we trade into the first target, we make an assessment about whether we like it, whether we don't like it. And I think it's quite obvious that we've now got a couple of market structures that we want to pay attention to. We've got the bottom edge swing, we've got the top edge swing here, we've got a target price, which seems to, interestingly enough, almost become exactly where the VWAP target price originally was in the first place, right there. Can you all see that? It's a little bit too obvious, isn't it? It's a little bit too obvious, but mate, The markets can be very obvious at times. You just got to have your eyes opened enough to see them. So we get our first target price here, and we're now looking at it from the point of view of once that's out, did it go bid? Did this price go bid? It's a massive monster Brent open session trade. Did it go bid? Is there an idea that perhaps there's a long accumulation getting taken at these prices? Yes or no? Does it look like there's a long accumulation going to get taken at these prices? No, right? So we now know that we are going to this target price, because if it's not a long here, the only time the commercial is going to be interested now is going to be at 67.20. So now what is your question? Now what's your question? Should be dead obvious. How am I going to get there? I thought it was obvious, but maybe not. Your question should be, okay, so if my target price is 67.20, how am I going to get to 67.20? How am I going to make money on the knowledge that 67.20 is going to trade? Because that's the only question, Howard. I mean, you might say, but the value then changes. Yeah, but that's not a question for the moment, is it? We've no way of knowing that question at this point, do we? We've no way of knowing that question at this point. So all we've got is the ability to ask the actual question is, at this point, how are we going to get there? So we start looking around and we say, right, we've just distributed some of our money into these areas here. We've got wholesale at 68.50, so that would be a reasonable thing to think, right? 68.50 could be a very good friend of mine here. Yeah? Doesn't trade 68.50. Damn it. Price starts to grind its way down a little bit. So when I start thinking about that, remember what we said about the guys that perhaps start buying into some of these retail indicators where they have an oversold stochastic, for example. So an oversold stochastic will start showing divergence in this area here. So maybe one of the places we can take a trade would be perhaps against this little pocket of liquidity there, because it's the only one that shows up. There's no real toxic candles until we get to 50 at this stage as well, right? So the only toxic candle we have is probably this block here in the first place, right? So we never get to that guy. So the challenge we've now got is to just pick up some liquidity and say, how do I get to 67.20s? Well, I'm going to sell 68.20s. Seems really obvious, doesn't it? I'm going to try and figure out how to get involved. And sometimes, like I mentioned, you're not going to get it. Sometimes, Theo, it's gone. Sometimes you just have to sit back and say, well, I'm screwed that up in some way, shape, or form, but maybe you didn't screw it up. Maybe you just didn't value it highly enough. And that means that it doesn't matter how many times you look at it, you still wouldn't have taken the short anyway, would you? Maybe you thought it didn't have enough downside potential. But as far as I'm concerned, if this doesn't trade 67.20s, I don't know what's going to trade 67.20s, right? Look at the value. Look at the value, guys. If that doesn't trade 67.20s, I don't know what is. So you might say, but, you know, I would have struggled to get into the top edge. It doesn't matter. I don't care that you would have struggled to get into the top edge. What I care about is that you've been able to add in here or in here and or in here. There's plenty of opportunities to get involved in the technicals by saying out loud one simple point. Where am I going? And by answering that question of this very meaty bottom edge here, the VWAP as well is in that location. The measured move target price is in that location. So everybody's going to be saying the same thing. We are going to be trading 67.20s all together now, 67.20s. How do I make money? Well, I make money by being short. How am I going to get short? That ultimately is a decision for you. Some of you will be liking the idea of selling into the pullback here. Some of you might prefer the idea of waiting for the pullback to start selling off and getting in before that. Some of you might like the idea that once we sold off and took out this low, that we had a big toxic imbalance in there, allowing you then to take a short at that stage. But whatever it was a short, wasn't it? Whatever it was, wherever, however you took the sell, it was a short. And even if that was your only trade today, a bloody good trade for $1,000. It was a very good outcome, wasn't it? You know, for a lot of people, they prefer taking these trades from, for example, if you're coming in the US session, I know a lot of prop guys that will go nowhere near the first half hour of trading. Nowhere near it. Why? Because they think it's too manipulated. They'll look at the first half hour of the US session, but by the US session, in this case, I'm talking about 2:30 to 3 o'clock. And at 3 o'clock, they will make all their decisions because that's the traditional time for what? 3 o'clock is a traditional time for the New York reversal. The idea that if you're short from the open, everybody will start piling in at 3 o'clock to reverse it. Or 3 o'clock will also be the New York continuation because everybody's taking their profits at 3 o'clock, but they're still bearish, and therefore they're going to be trying to add back in to take you up to lunchtime at 5 o'clock London, or to take you into the Brent market close between 4 o'clock and 5 o'clock. So for a lot of people, they won't make any decisions, especially if they're in the States, until 3 o'clock. So when you come into this 3 o'clock trade area here, the value is up for, there's no question about the value. There's no question about what the commercials were doing. How do we know that? Take the value off the chart. How do we know what the commercials were doing? Well, A, VWAP is sell side. B, all the toxic order flow is sell side toxic there, very obviously. A little bit of sell side toxic coming away from here, very obviously. So we've got these imbalances coming in. So the commercial is sell side. How does a commercial get off a short sell, Simon? Did they get off a short sell in the middle of a bracket structure? Did they sell it short to come off in the middle of a bracket structure? No. They sold it short at lower prices to come off at day session lows, right? If I saw a commercial buyer at higher prices, which was this guy here, right? And how do we know that was a commercial buyer? Did you see the toxic candle here? Well, this guy didn't buy here to come off the trade at 68.80s. They bought there to come off the trade way above 69 bid. Way above 69 bid. So when we look at that, we can simply see it. We're not having to guess about it. We're not having to figure this one out. We're not having to try and guess about where the trade is going to go to, because we can see what they're either doing or we're expecting them to do, depending upon how early you want to be in the play. So for a lot of people, the best thing you can do is wait until 3 o'clock, see what they have done, and see what the targets are, right? So let's just do that. So we'll clear off again all the charts. So let's assuming that you want to be this lifestyle trader, and at 3 o'clock, this is what you're presented with right here. Okay, there's your 3 o'clock chart. So if I look at the 3 o'clock chart, I'm going to be presented with a couple of things. First thing, I'm going to be presented with a top edge. So let's just draw the upright first of all for 3 o'clock. So there's the 3 o'clock upright on the right-hand edge. So now you're looking at the markets and you're saying, right, what am I going to be doing? First things first, I'm going to be looking at where the session high is. And the close here is actually at the session low. So I'm going to look at this and say, right, well, there's the trade here. Because we're already at the overnight session lows here, this is quite clearly the overnight session lows, I kind of think that there's going to be a bit of profit taking from the shorts. Why? Well, because it's 3 o'clock. Well, there's always a bit of profit taking at 3 o'clock. Now, I'm now going to ask the question about value. Do I believe the value is bullish or bearish? Because this is going to be really important about where I think the price may go to. Because my prior day low was obviously over here, because there's the 2 o'clock candle there, right? There's the 2 o'clock candle there. So there's the prior day low for the oil trade. So when I see the prior day low and I see the monthly VWAP and I see the market structure, I'm already got an idea that the target price, if I'm bullish, because I might be bullish, if I'm bullish, that's my target price for my day session. If I'm bearish, and I might be bearish, that's my target price for my day session. Does everybody agree with those two target prices? Does everybody agree that those two target prices are really easy to trade to? Well, we don't know, because we don't know whether we're... but can everybody agree that we can all have the same target prices? Can we all agree that these target prices are visible to everybody that's just doing this quite easy process? There's nothing else. There's no point in me targeting the previous day high, because we've already broken the previous day high, haven't we? We've already taken out that guy at that point. We've seen that they've taken it higher. We've seen that they've taken it higher. So we now know that there was a commercial buyer from this price because it's achieved that outcome. But that commercial buyer seems to be finished. Why? Well, because we've seen a commercial seller here. So what you're going to do is at 3 o'clock here is you're going to look back and say, where was the last commercial? Quite an easy question to answer, isn't it? You look at the biggest, most toxic order flow you've got in the charts, and you start asking that question, where was the most toxic trade that we've seen at 3 o'clock? It was this guy here. Is that guy selling it or buying it? They're selling it, right. So we now know that that's the last commercial operator. We talked about this when last week when we talked about the liquidity resulting in toxic order flow, right? The imbalance, or the idea that the buyer is pulling away that fast and slow candle narrative, that other time frame player we called them, or the one time frame trader that we called them, right? So we called them the one time frame trader, and as we called them the one time frame trader, we started to say, well, what caused the one time frame trader? And the answer was a commercial operator in the background. So we now have a toxic commercial seller here, and we've got a commercial seller here. So this is dead easy. Where are they targeting? You might say, well, maybe they've already got their target into this level here. Maybe they're using this as their target. Great. Yes, maybe they are. Well, if that's the case, we would then be looking at 3 o'clock and saying, right, I'm going to look to see if we can find any reason to buy this because they've hit their target. And if we've got a great reason to buy it, then we could obviously be targeting what price? What is our target for the afternoon session? 69.65. But what if we look at it and we decide that there is no buy-side value in this? What if we look at it and we look at it from the commercial's point of view and say, this is still sell-side? Well, we've got to try and think about that and say, well, if it's still sell-side at 68.20, they're going to go after 67.20s for the afternoon session. Do you agree with that? Do you see how consistent this process is? Do you see how repeatable this process is? So all you're trying to now do at 3 o'clock is figure out whether the buy side is the trade or whether the sell side is the trade. So you're going to look at your value narratives and you're going to come up with a view on this. So when I look at my value narratives, what do you think my decision was at 3 o'clock? Are the commercials looking to buy this, yes or no? It's 100% no. Well, if it's 100% no, and we know there's going to be profit taking here because of where it is, when it is, can we also agree that the only question you've got is, how am I going to get party to this trade? How am I going to find an opportunity to get into this to try and make $1,000 this afternoon? Because we know at 3 o'clock we should see a bit of a pullback. We should see a bit of a hold in these areas. Could the value change and go bullish? Of course it could. So we have to be aware that this is a key level. We have to be aware that maybe the commercials are finished. We have to be aware that this could turn into a bottom edge buy. But, well, we know if it's going to be a bottom edge buy, it's probably going to be where? So if you think that this is a bottom edge buy, have you already got an idea about where it might be a bottom edge buy, guys? Is it going to be 67.20s? Probably not. It's probably going to be this liquidity at 68 here, isn't it? It's probably going to be 68s. Would you agree? Theo's already agreed. Theo already knows. So if the value was bullish here, and we've now came into this trade idea, I'm already thinking about this, the liquidity that we might be able to pick up at 68s. Should be really easy to see that, right? What if a buyer comes in at 68.05? Okay, maybe we'll buy it at 68s. What if our liquidity comes in at 68.10s? Well, maybe we'll buy it at 68s. It doesn't change. What if a buyer comes in at 68.10s and then it goes straight up? Well, we've missed it, haven't we? If it goes straight up and it gets toxic, maybe I'll be buying at 68.25 on the way back down. Why? Why might I buy at 68.25? Maybe I'll buy at 68.50s. Why would I buy at 68.50s? Because my target price is 69.65. Still got $1,000. So does it matter if I don't get 68 on the way down? No. If it's not there, it's not there. If I don't get it, I don't get it. Right? If I don't get it, I don't get it. It's as simple as that. It's going to be whatever it's going to be. Anyway, so we're sell side. Our job is to find that opportunity to play into. And interestingly enough, we get this beautiful little spring trade, as if by some sort of delicious voodoo magic, somebody came in at the wholesale price level and bought it. Very kind of them. And that gave us this beautiful little springaroo all the way back into this little pocket here at 25.30. It gave us a nice play to trade. We're now targeting 67.20s. And obviously the sell came in and ripped 67.20. Beautiful. There it is. There's your trade. Is that difficult? So let's recap why that was so easy. Now you might say, but, what about the fact of 3 o'clock? What if, okay, so it doesn't have to be 3 o'clock, but we know 3 o'clock is a genuine area where we start seeing some trade opportunities. We also know that we're always trying to be in for 2 o'clock, always trying to be in for 2 o'clock, because we know that 2 o'clock can be a very fast candle, especially on a Monday. Why? Because it's the first time we've seen any trade on the WTI itself, on the floor, if you like, for the WTI. So we know we need to be in sharpish. If I know I need to be in sharpish, what was the only commercial activity before that? It was this sell candle here, wasn't it? Sell candle with sell side value. So if I haven't yet got a trade on, and I want to get in early enough, I'm going to try and sell in this area. What if I don't get it? Well, I don't get it. If it's not there, it's not there, Theo. Sometimes it's not going to be there. Sometimes it's going to break, and sometimes you're going to say, well, that was good. It doesn't matter. There's another one coming up, and then it breaks at 2 o'clock, and we say, right, I've missed it, or I'm in it. And usually if it breaks at 2 o'clock on the very first candle like that, I'm always going to book some monies. Value is very bearish. So if the value is bearish, I'll be looking for 2 candles back and I'll be selling some more. The value is still very bearish, not quite the most explosive move to the downside, and that's not a surprise. Why? Why is that not a surprise? Well, if we look at the high price, and we look at this price, we would imagine that most people would see this price here as the first markdown, and then the second phase is the market making, right? So you'd imagine if the second phase has this kind of structure here, you'd imagine if I go from the close there and I go up to the high price there, they're going to be market making down in this half of the trade here. So they do market make. You can see the speed of the move is very labored. So the market maker is buying and rotating. Most of these candles will be overlapping candles to some degree. And we can see that they're overlapping candles to a very high degree as well, can't we? Now we can add in things like the dollar, and the dollar wasn't really with it. It was kind of it was macro bearish, wasn't it? Macro bearish, quite strongly macro bearish today, yeah? So the macro bears on the dollar were all over this for that short-term macro top edge sell in the first place. So we kind of had that as a tailwind for the sell and as a headwind for any buy trades. And then we've got our target price. And a target price is based on, you know, the day session lows. The target price is simply the day session low because we've already taken out at that stage the Brent session low here. We've already done it. It's already in play. These things are known. It is fixed before your day even begins. You know what the target prices are. Your job is then to ask the question, am I bullish or bearish? Do I believe I'll get to this target price? Do I believe I can see any commercial operators running towards those target prices? So when you start looking at any chart, it doesn't matter. We can take a blank chart. I'll just open a brand new chart, guys. We'll just open a gas chart, okay? Not for any reason, because I don't have a clue what's happened recently on the gas market. So we'll just take a quick look at the gas market here. And we'll do the same thing. We'll do the same thing. We'll take a 5-minute chart. And we'll look at the previous day coming into the US session. Fair enough? Okay, so there's the previous day coming into the US session. So we can see that we can mark off the same levels as we did on the oil. We can see there's the 2 o'clock low right there. So there's the gas market low. We can see that the gas market high has been taken out, so we don't have to bother much with that. We can see that there's an overnight session Brent market low in here. And we can see that there's an overmarket. Sorry, this is oil again, isn't it? You absolute galoot. I thought, that looks awfully familiar, doesn't it? We'll try again. Okay, so let's go back. Gas market. Yes, we're in the gas market, guys. Okay, so we've got the overnight session lows, the overnight session highs. The US high here has been taken out. The overnight session low comes in here. Brent seems to be a little bit higher because obviously we take out the overnight session high here. And the Brent open low was this guy here, right? So there's a Brent open low at that stage. And we've obviously got a finishing price up here. So you've got a couple of areas. So the first thing you're going to now do, obviously as it's going higher, is you've got a target price perhaps of here. As it's going higher, you've got a target price of here. If it's going higher, you've got a target price of here. These target prices are all known to you. As we can see, as the price goes higher here, of course, you're taking out all the target prices on the way up. And eventually, when it comes back out, you're now looking at that saying, right, if I'm bullish, that's my target price there. So there are only 4 target prices on the screen, aren't there? Well, that's got to be a good thing. Because, you know, obviously when you start looking at these as ideas, and we'll just take it out till we see what happened in the gas, every target price is a commercial decision. Now, we don't know what the commercial decision was, but let's put, for example, let's put oil on the chart here so that we can just simply, well, let's do gas 1 versus gas Z, okay? So we'll do that maybe a little more relevant, minus NGZ 2025, so that we've got something, some sort of relative value to look at, okay? So we're just going to do a relative value for the calendars on the swaps. So let's take a look at the relative value in the calendars and the swaps here. So is it kind of obvious about what decisions are going to be made in two of those locations? Well, obviously, as we're coming into the high price here, it's kind of obvious that there's a very sizable drop-off in sell-side value here, isn't there? Now, you might say, but that's before we see anything. Okay, so let's assume you're now looking at that saying, okay, well, it's a little bit too early for me to sell into. Do we all agree at that stage there is a lot of sell-side value? Can we also agree that there is a toxic candle here, suggesting that there was a commercial seller on this trade? So we've got an incredible bit of evidence, haven't we? There's a commercial seller on this trade. We've got sell-side value. And therefore, you're going to be looking at it saying, this trade is at least in play. And this trade is also in play. This trade may also be in play, but we've got to get through these other two first, right? Now, why do I think that trade is almost a definite no-no? Well, because the value is already taken out the value that we've seen over here, right? So I think that the opportunity at that price is now here, right? So if I've seen that trade here with that commercial seller here, I know that the price is going to be targeting this liquidity as a bare minimum. Everybody will have the same price as I've got. Everybody's got the overnight low there now, haven't they? So where would you imagine, if you haven't got short yet, where would you imagine you're going to be able to get short? Let's assume you've got no trades on yet. Probably at this trade level here, right? Probably at this trade level. Why? Because there'll be probably buyers taking, or sellers taking profits here. There may be some weak buyers who think the market's bullish for whatever reason. So we think that there's going to be maybe a bounce here. Maybe we can get some short here. We've got a lot of downside value. And you can see that it kind of holds this area for a while. Could have got you a chance to get into a bit of short business? Sure. The one thing you're definitely not doing is you're definitely not buying this, right? As the price then breaks, the value actually starts moving out of this area, doesn't it? The value there starts moving out, and you're saying to yourself, okay, I'm just aware that that little turn in value there could be interesting. If we look at value in the background, you can see that the value before at this price was about the same. So perhaps there's an opportunity at that stage to say, yeah, maybe there's going to be a buy coming in, but it's not brilliant. So what I'm going to do is I'm going to maybe book some money here. When the price comes back into this area, the value doesn't seem to be bullish enough to go long, that's for sure. I'm not sure the value is particularly strong to go sell side either, knowing that we have the commercial cash open just about to take place. Bearing in mind that gas opens at 2 o'clock as well. So we start looking at the 2 o'clock area and we start wondering about whether the gas market is going to be buy side or sell side. If I think it's going to be sell side, and at this stage I probably do think it's going to be sell side, I'm going to be starting to think about where can I get a little bit of sell side liquidity. I'm going to be looking at the liquidity perhaps at that pivot. I'm going to be looking at the liquidity perhaps coming in from this commercial seller here. So at that point there, I think the market is perhaps bearish and I'm going to be looking for opportunities to play this. I'm going to be targeting at that stage this bottom edge here, right? You're going to be targeting that bottom edge. So anywhere is going to be good. What's the problem? Well, when the price opens and it goes up to this price area, the value's now came off the trade, hasn't it? So now I'm wondering about whether I've got any opportunity to sell this at that price. Okay, so I'm going to turn the question around. If the values came off it like Theo and Ulrich are saying, can you see any signs of a commercial buyer that's bought into this? Yeah, we can already see that toxic buyer that's came in just here. Well, if there's now commercial buy side value and a toxic buyer, where's the next sell going to be coming in anyway? Where is the next sell going to be coming in? Is it going to be coming in where my sell arrow is regardless? Here? It's going to be coming in at the top edge. The worst case scenario is going to be coming in at the top edge because that's where the commercial buyer that's obviously came in here, which we only knew hindsight, because we didn't know it was going to come in at the time, because the value wasn't suggesting it for sure, but they did come in, and because we recognize that the value is bullish and we can see the toxic order flow, I don't think these commercial buyers are going to come in unless they get that price. That's what they're aiming for, right? Because that's the conversation they're having with their desk at this point. I'm not going to buy it here unless I'm going to take out that price. So that's pretty good, right? That's a pretty good play, right? That's a pretty good play. So it's dead obvious, isn't it? It's the most obvious thing you've ever seen. So we get rid of that box and we say, well, I'm not going to be selling it. And we just observe the reality of what does happen. Whether we agreed with it at the time or not is absolutely irrelevant. What did they do? That's all that's relevant. Now, we know that there was a nice commercial seller here. That's perfectly obvious. We may be able to get another shot at it if the value peels back off again. But certainly the idea with the value now going bullish, we can see it's gone bullish. We can see that it's also got this toxic buyer coming in. Maybe a buy on a pullback now becomes a possibility because of what? Because we know the price is going to trade here. Almost 100% certain at this stage that that price is going to trade there. So I'm going to be looking at that saying, okay, I'm going to be looking maybe for a buy trade, maybe in that little pocket right there. Would that now be reasonable? Because that's my current scenario. That's the current commercial scenario, correct? A commercial doesn't buy. The toxic order flow doesn't appear unless their target is that macro level liquidity, day session highs, session highs. It's not going to be there unless that's what their target is. So I am now bullish. I now believe that I'm going to try and buy pullbacks until we reach this price. Is that a nice, easy storyline? Sure. Can it change in 2 minutes' time? Sure. And that's the problem. So we see the price is now holding. We thought there would be profit taking here because we were ready to sell this, weren't we? So we thought there was going to be profit taking here. We can now narrate the fact that there's a commercial buyer here. They got toxic here. They've probably taken a wee bit of money here, but is that likely to be a sell trade for them? Not a chance in a million years. So what are we going to do about it? Well, we're going to look at the possibility that following that 2-candle pullback, I'm going to look at the possibility of maybe taking a swing at this, right? Reasonable? Why? Because we're not going to be looking, the commercial's not going to be trying to sell it until we get up into this top edge here. Can it change all of a sudden? Sure. What if the value went sell side at this point? What if we took our buy trade and we got a little bit of an upside and then the value suddenly dropped? Well, there would be a very, very good chance that we would then be drawing in that liquidity there so that we could do what? So that we could sell it. Because what's our target price? Our target price would be the day session lows. Why? Because why would a commercial sell here unless they're now targeting this price? So if you wanted to wait for the commercial to show up as a seller, possibly missing out on the opportunity to play, well, you could not have to sell the spring trade. You could have waited for then the toxic seller coming in and then hoped, of course, that you then get some sort of pullback to give you the absolute 100% opportunity to play that, right? So what we're saying is you've got a choice in these matters. It's not like you've got to be the guy that then sells the top edge or the guy that then buys this trade. Because obviously if I now look at this on the right-hand edge, at that point there, if you don't like buying pullbacks on red candles, what could you have done? Well, we've got buy-side value, right? So let's just draw it up. Let's make sure we're 100% clear. So if I'm now looking at that as my target price, there it is, there's my target price. What could I now do? Well, the current price is here, isn't it? That's where the current price is. The value is bullish, so what could I do? Well, if I don't like the idea of buying on the drop here, I could then see the price maybe coming into a balance area here. I could then wait for the commercial buyer to show up here. Yeah. And then I could say, right, well, I'm going to buy into that space there if it comes back, and that's my challenge. If it then comes back in, because what happened? Well, think about what the trade did. We've covered this for weeks. So many people copy this process that we cover here. But what happened? What was this candle here, guys? What was that candle? The response to what? Well, it's the response to, for example, a commercial just came in here and says, I want to buy 500, right? So commercials came in here and says, I want to buy 500. Maybe maybe they're doing it in the marketplace. Maybe they've not got filled 500. Maybe they've got filled 300, right? So they buy, say, for argument's sake, they managed to get 300. They still need 200 contracts. So they buy 300. They stop buying at this stupid price, and they wait for the price to pull back a little bit to buy their final 200 contracts, right? So they buy their other 200. And as they buy their other 200, the market maker sees they buy of another 200 price, and then all of a sudden what's going to happen is that. And it goes. Right? Simple stuff. You've seen it often. We've talked about it often. We've talked about it for years. So this doesn't have to be your trade. You can wait to see that taking place, and then if the idea is right, maybe you'll get an opportunity. Maybe you won't. Again, if you don't, you don't. Maybe you want to put in a BSG squeeze. Is the buy side value ridiculous now, guys? So you saw we got a bottom edge liquidity there. Okay, so we got a beautiful little jump into that liquidity. You can see that it's pinned a few times there. So if you're a bottom edge buyer, that is just perfect in that location there. And you can see we get this very toxic push and another very toxic push. So you're going to be flooding this on a pullback with a buy order, aren't you? You're going to flood this with a pullback on a buy order. So what happened? You never got one. Well, you kind of did, because this is a 5-minute chart, but that's as much of a pullback as you got, guys. That pin there was as much of a pullback as you ended up getting. So that would have been your only chance of buying on the pullback at that stage. Now, I might argue that if we drop it down perhaps into a 1-minute chart, could we have seen the pullback in that area? Well, there it is there, isn't it? You can see it at that stage there. There it is in a 1-minute chart. So maybe you got a little bit lucky and got into it before the trade went back towards the top edge, but you would have been really lucky to get that one, unless you're really, really keen to play. So unfortunately, on that occasion, maybe this trade wasn't your trade. But anyway, so what happened? They got their target price. No shit, Sherlock. They got their target price, and what happened? Sell side value. Sell side value came in. So obviously, if you're looking at it from a commercial's point of view, you're going to say, right, close it. And now what I'm thinking to myself, well, it's not exactly crazy sell side value. So we've got our final target price. So that's pretty good. Maybe we might be able to buy back in, but why would we? Because we've now got our final target price. It's coming into the London session close. There's a lot of gas markets closing off at that stage. And maybe we'll just have to wait. And again, you can see that that's the target price at 3 o'clock. It's just a thing of beauty. And since then, you can see the value is now gone bearish. So if the value is now gone bearish, you're going to be thinking about what? At this stage, you're going to be saying to yourself, well, here we go, guys. There's my target price. How am I going to get there? Well, I'm going to be thinking about coming out of lunchtime. So before we do that, I've got a question for you. Have we seen any commercial sellers aiming for that target price? Well, I'd imagine you can all agree that that was a commercial sell there. Would you agree with that? This wasn't, because it never took out the prior low. This was a commercial sell here. So we can, whether we agree with it, whether we disagree with it, is not up for debate. It is a commercial sell at that stage. So we can see, right, well, possibly a little pop into liquidity here, and I would be able to then take a shot at trying to get to this price. Is that the current trade for everybody? Do you see how repeatable this process is? Do you see how structured it is? See how easy it is to think about these as ideas, as tradable opportunities? It's not that difficult. You can all look at the value. You can all see where the target price is because we know how it works. We can see that there was a commercial seller coming in here. There was a commercial seller coming in here. So if there's commercial sellers coming in here, and especially this one from a lower price, we know that they are only coming in because they think they're going to get that price there. They don't come in otherwise. They don't need to pay silly prices at these low edges unless they believe they're going to get an even sillier price at an even lower low edge. By recognizing that opportunity, you recognize the chance that you've got of making a great trade at a great price. And that's all we can ever do as traders, isn't it? It's all we have available to us is to look at it and say, I know where this is going. I know where this price is likely to take me to. And if I know where it is, it's so repeatable. And if we don't know, guess what? We just leave it alone. If I don't have a clue about this being a buy trade, it doesn't matter. I'm already thinking about the sell trade here. When it gets here, I'm not thinking about the sell trade anymore. I'm now thinking about the trade up to here. My job now as a trader is to forget the sell. The value is bullish. My trade now is to be long for that top line price. End of story. There is nothing else. This is all it ever is. So tomorrow, when you come into your desk, you're going to ask a very simple question. Where is the destinations? Where are the destinations? Mark the destinations to begin with. In other words, you decide to go on a holiday to the Maldives. Now your job is to figure out how you're going to get there. Now your job is to say, right, I know that there's going to be a possible target here and a possible target there. Have I seen any evidence that there is a commercial going towards any of those two targets? Can I now confirm that evidence by viewing a value? All right. So when we see this top edge here, we had these target prices here, we had the target price here. We've got a top edge. Have I seen any evidence of commercial selling to get to that target price? Yes, I have. There it is there. Because I've now seen the evidence of that commercial selling coming in, I don't think we're going to see any trade until we see the bottom edge prices. It's just not realistic to think about that unless the value changes, unless the market narrative changes. And we use the same market narratives over and over again. We all have the abilities. You've all been in the room long enough to know how to do a value line. You know what value lines we use, because we use the same ones every day on every single chart. All you've got to do is then pick up the narrative, pick up the toxic behavior, and look to see where it's going. It's only a two-step process, Theo. People would think this takes like 1,000,000 steps to learn. It's 2 bloody steps. 1, where are the destinations for my trade today? Bottom and top, where are they? Draw them on the charts. 2, where is the last toxic behavior? Mark it on the charts. 2 things. Then the next question we've got is, Do we agree with it or do we disagree with it? If we agree with it, how am I going to join in on the journey? How am I going to be party to that journey itself? Where am I going to find my opportunity to take a bit of money out of this narrative? 2 questions, 1 answer. Enhanced by the arrival of order flow, by the arrival of book liquidity, enhanced by the arrival of course, your main relevant relative value narratives. And from those 2 locations, we start attacking areas. We start attacking liquidities. We start making brutal, easy to trade decisions. Look at that seller that came in here. Somebody's really liking this and decided to sell that little pivot price right there. Drop it down to a 1-minute chart. You'll see that pivot price there. See it? So somebody's obviously targeted that tiny little pivot there to get that short sell in the books, and who can blame them? It looks bloody good, doesn't it? And that was the trade that we were talking about live at the time. And obviously the sell that's came in there, targeting into this bottom line swing here, seems like a reasonable, at the moment, a very reasonable proposition. So tomorrow, guys, 2 questions. Where is your destination? Which of the 2 destinations do you see as being preferred? So it's really 3 questions. Number 1, where is the 2 destinations? What prices? Question number 2, where do you see those destinations being traded by the commercials? Is it the upside one or is it the downside? There should only be one. It's the last one. Question number 3, do you agree with them? If you agree with them, where are you going to join in? Not if you're going to join in. The question now is, where are you going to join in to get to that destination? The completion of that little process takes you into your trade. It takes you into your targets. It takes you into reading liquidity levels as they evolve. Give it a go again tomorrow. Try it. See how you get on. And by adding your value narrative, it allows you to make better decisions. Which ones are right, which ones are wrong, pass on the ones you don't think is correct, leave it alone until it clears. Have a good one. I'll see you guys in the morning. I'm going to say adios amigos, arrivederci, auf Wiedersehen, sayonara, tax que todos, vidania, spasibo.